This is Nightly Business Report with Tyler Matheson and Sue Herrera.
We want to give you, the American people, a giant tax cut for Christmas.
Republican leaders reach an agreement on a final tax bill. Now, the pressure is on to tie up all the loose ends.
We continue to expect that the economy will expand at a moderate pace.
The Fed raises interest rates as Janet Yellen's term nears an end and the economy powers on.
And paying up. Why it is costing drivers a lot more to fill up this year than in years past. Those stories and more tonight on Nightly Business Report for Wednesday, December 13th.
Good evening, everyone, and welcome. On Wall Street, the Dow closed at a record. Investors' focus was on Washington and reports that Republican congressional leaders reached a tentative agreement on a tax bill. At the Federal Reserve, policymakers felt confident enough in the economy to raise interest rates again and sharply lift their outlook for growth. The Dow Jones Industrial Average rose 80 points to 24,585, an all-time high. It had been up triple digits for most of the day. The Nasdaq gained 13 and the S&P 500 lost some steam into the close, falling 1 point.
Well, let's start tonight with that big tax bill, which does appear to be nearing the finish line. Republican leaders have made some changes, reaching a basic agreement on a final proposal that sets up a possible final vote next week. Ilan Mui has our report tonight from Capitol Hill.
Republican lawmakers presented their tax plan to President Trump at the White House during lunch today, and the centerpiece of that proposal is a 21% corporate rate. Now, that's a little bit higher than the red line of 20% that the president had previously drawn. But today, Trump said he'd be thrilled to sign that bill into law.
The bill is going to cut taxes for American businesses, both big ones and small ones, so that they can grow higher and compete all around the world. Right now, they're paying 35%, and that's the highest in the industrialized world, in many cases by far. And we'll be bringing that down to a number that will be extremely impressive.
Republicans are under pressure to get this done after last night's special election in Alabama, in which Democrat Doug Jones beat Republican Roy Moore in an upset victory for Alabama's Senate seat. And Democrats today called on Republicans to delay any vote on the tax bill until Doug Jones can take his seat. They also blasted Republicans' plan to lower the top individual rate to just 37%, saying that's just a giveaway to the wealthy.
I'm just really flabbergasted at the idea, particularly when they promised a bill that would really help the middle class. Most of what's there for the middle class is written in disappearing ink.
Some Republicans were unhappy with that idea as well. Senator Marco Rubio of Florida said that he feels any increased revenue from raising the proposed corporate rate should go toward paying for a bigger child tax credit. Also, Susan Collins of Maine said that she's no fan of lowering the rate for the rich, and several other Republican senators still remain on the fence. Now, lawmakers have been holding a conference committee meeting today to discuss the final version of the tax bill. They want to have some final text out by Friday so they can schedule a vote early next week. For Nightly Business Report, I'm Ilan Mui in Washington.
Well, the prospect for tax reform is one of the reasons why the stock market has rallied this year. Now that the bill appears to be nearing the finish line, what does that mean for the stock market and investors? We're joined by Mike Holland. He's the chairman of Holland & Company. Mike, great to see you. It's been a while. Welcome back.
Sue, great to be here.
It's been so long I called you Mark, but you're Mike. Let's start, first of all, with the market at this point. You know, we do have tax reform seemingly on the way. How much more do you think the market has in it?
Well, it's a really interesting point in the market cycle, Sue, because the market has been anticipating the earnings coming from the tax cuts into the pricing of how they view stocks, price earnings multiples, what you're willing to pay for earnings. Into the future, if Jamie Dimon is right, for example, he spoke today. If Janet Yellen is right, she also spoke today. Companies will be making more money than they otherwise would have made, in addition to the current valuation concern, or applause, I should say. So you end up with a situation where you may get a bump and then a further bump. Jamie Dimon referred to the fact that companies now can pay out more in wages, they can buy other companies, they can do lots of things, raise dividends. do stock buybacks. If those things happen, you get this you could get the virtuous cycle of things getting better and feeding on themselves. We've seen the other cycle, which goes in the other direction. So you actually could get a fillip from this that lasts for a few more years. It's possible.
So that sounds very good for companies and shareholders. Do you think this tax bill, Mike, broadly speaking, I know this isn't really what you do, but do you think it's good for the economy?
If you end up, Tyler, with people getting higher wages, the answer, in a simplistic way of looking at it, the answer is yes. People will have more money to buy more things, and the economy could end up with a higher GDP number a year from now than we have right now, because we both know, the three of us know, you've got 2/3 of the economy, 3/4 of the economy is the consumer. So if that's the case, and the consumer feels better and has a little bit more money, we're going to get a pretty good test right this Christmas season. The numbers are beginning to look pretty good, particularly online numbers. I think people feel better, and they may have a few more bucks to spend, and the economy will benefit.
So if you want to put money to work in this market, given how far it has moved, where are you looking for value, perhaps, or something that you think has more upside, Mike?
Well, value is the cliche in the eye of the beholder, but Janet Yellen today, of all people, said that she thought, and the Fed thought, that stocks were not overvalued. I don't want to overstate what she said, but she said it's a high end of their valuation, but she basically said she wasn't, and the Fed was not worried about the level of where prices are today. Presuming that they're reasonably valued at the high end, I think technology continues because that is leading the charge for the global economy right now. Companies like Microsoft are still selling at, and I'm not talking about Alibaba and Tencent and Chinese companies like that, or any of the FANG stocks, but a company like Microsoft, which is a leader, is still Apple. They're still trading it at reasonable they're trading at reasonable valuations.
Got it. Mike, nice to see you again.
So great to see you, Tyler.
Mike Holland.
Likewise, Mike. All right, now to the Fed. The central bank did raise short-term interest rates as expected for the third time this year. And it says also it's ready to hike a few more times in the new year, maybe 3 more. It was Janet Yellen's last news conference as chair of the Federal Reserve. And as Hampton Pearson reports, she started by giving an upbeat view of the economy.
At its last meeting of the year, Federal Reserve monetary policymakers raised key short-term interest rates for the third time in 2017. Updated forecasts see the economy growing at a 2.5% rate next year, with unemployment dropping below 4%. Monetary policymakers feel the economy is strong enough to possibly stand 3 rate hikes next year.
When you look at the projections, that there are many factors that affect those projections, and changes in tax policy, that's only one of a number of factors.
With President Trump and Republican leaders on the verge of finalizing tax reform, the Fed chair's last news conference was dominated by questions about the possible impact on the Fed. Monetary policymakers expect a modest lift to economic growth, business investment, and increased consumer spending. But they also voiced concerns about estimates it could add $1 trillion to the national debt over the next decade.
I am personally concerned about the U.S. debt situation. It's not that the debt to GDP ratio at the moment is extraordinarily or worrisomely high.
And lots of questions about the digital currency Bitcoin, which the Fed chair characterized as a highly speculative asset.
I really don't see any significant exposure of our core financial institutions to threats from Bitcoin if its value were to fluctuate. I don't see a threat to our core financial institutions.
This was Fed Chair Janet Yellen's last news conference. She'll preside over 1 more meeting early next year. Between now and then, she says her goal is to provide a smooth transition to her designated successor, Jerome Powell. For Nightly Business Report, I'm Hampton Pearson in Washington.
So what is in store for the economy next year, and are there new risks that investors need to be aware of? Patrick Chovanec is with Silvercrest Asset Management Group. Patrick, good to have you with us. You know, the economy seems by most measures to be doing quite well. The labor market is very strong. The Fed says unemployment next year may come down below 4%, 3.9 I think was their forecast. But there's a tax bill that is stimulative on a hot economy. Are you worried that some of the precursors of inflation or of economic overheating may be in the pipeline somewhere, and that the Fed will, as a result, start raising rates faster, perhaps triggering a recession in a year or two?
The economy is doing very well, and the forward indicators like new orders suggest that there's a lot of growth momentum coming into the new year. There is some talk now, increasingly, about the prospect for inflation. Inflation remains low. It's below 2%. It's a point that Janet Yellen stressed today. But we're at a point in a business cycle where normally you'd be looking for the signs of inflation picking up. And then when you add the stimulus from a tax cut, that could pour more fuel on the flames. But it's important to keep it in perspective. Inflation right now is low.
What about the impact of the tax bill? I mean, they still have to work out some of the differences, but it looks like we may have a deal and a vote by next week. Net, do you agree with the Fed chief where she says it will be mildly stimulative to GDP and economic growth?
So it's interesting. A year ago, when the prospect of both new spending increases and also tax cuts were raised after the election, Janet Yellen gave some testimony. And she said that to the extent that it simply, any kind of fiscal stimulus poured more demand into the economy, that would not be a good thing. But to the degree that changes to the tax code or other sorts of things could actually generate productivity gains, she would look on that much more positively. And I do think, if we're just talking about stimulus, just talking about adding demand, it comes at a very unusual point in the business cycle where the economy is starting to reach full capacity, and you want to be careful about doing that.
We all know, Patrick, that as soon as she leaves office, she's going to go and load up on Bitcoin, right? We can agree on that. But let me ask you what you think. It's early for legacy writing, I know. But what do you think she will be remembered for? What do you think the final grade on her term will be?
So it's always tricky to give a Fed chair their grade just as they're leaving. Because if you remember, Alan Greenspan left to accolades, to his genius. And a few years later, it didn't look quite the same way. And I think one of the big challenges going forward is this huge balance sheet with the Fed that under Janet Yellen's watch that accumulated. And all the money that's lying within the banking system, not circulating. But if we saw a pickup in lending, if we saw a pickup in inflation, these could be problems. So the Fed unwinding its balance sheet, which she's begun to do, I think is really the task at hand before we can say that they've stuck the landing.
All right, great point, Patrick. Thanks very much. Patrick Chovanec with Silvercrest Asset Management.
Still ahead, Apple's investing hundreds of millions of dollars in an American company in an effort to create American jobs. An update now on the fires in Southern California. The winds returned, hampering efforts to contain the Thomas Fire, which has burned through more than 360 square miles in Ventura and Santa Barbara counties. These fires could push the amount of insured losses this year from natural disasters to a record of more than $130 billion. Insurers and reinsurers, of course, saw Hurricanes Harvey, Irma, and Maria, two Mexican earthquakes and fires in Northern California just this fall.
Oil prices fell for a second straight session. Domestic crude settled at $56.60, lowest level in a week. A slump in stockpiles was offset by a larger than forecast rise in gasoline inventories. Prices have been up steadily over the past few months, and drivers are taking notice every time they go to fill up. Jackie DeAngelis explains.
Gas prices are the gift that won't be giving to consumers this year. The national average for a gallon of regular is $2.45, according to AAA. That's 23 cents higher than a year ago. And while prices could drop a little over the next few weeks, anywhere from 5 to 20 cents, AAA still thinks they're going to be higher than the past 2 years. So why are pump prices bucking the seasonal trend? For one, crude prices are closer to 60. This time last year, they were closer to 50. The hike due to OPEC's supply cut extension and evidence of a little stronger demand. But we also had 2 major hurricanes, making September prices the peak for the year when they should have been falling at that time. Add to that continued growth in gasoline exports, and you have the perfect mix for elevated gas prices.
When you see increased export numbers, I think it's indicative of a global recovery that we suspect has happened, and I think that's supportive of gas prices. We've seen increased export numbers. We've seen pipeline problems. We've even seen the Saudis try to job on the price of gas and oil up, and it hasn't really worked over the last few days. To me, that means in oil, the 60 level is very, very important, and I don't think we're going to get over it that easily.
Early next year, gas prices may fall a bit, perhaps a national average of $2.25 to $2.35 by February. But longer term, it'll all depend on crude prices, supply and demand here in the States and overseas, and how OPEC members decide to play their cards. For Nightly Business Report, I'm Jackie DeAngelis.
AAA also says premium gas in some cases may not be worth the money. The organization tested 6 cars where manufacturers recommended but did not require premium gasoline, and they found that the fuel economy did improve by about 3%, but premium fuel costs about 25% more than regular.
Apple makes a big investment in a chip maker, and that is where we begin tonight's market focus. Apple awarded the chip maker Finisar nearly $400 million from its Advanced Manufacturing Fund. Finisar makes the laser chips used in the iPhone X. The purpose of the fund is to support manufacturing processes in the U.S. and create jobs.
We're thinking about where are the opportunities across the U.S. to help nurture companies that are making the advanced technology and the advanced manufacturing that goes with that, that quite frankly is essential to our innovation. And so we want to nurture those companies. Often those operations are very capital intensive, and we want to help them.
Finisar stock surged nearly 23% to $23.70. Apple up about 60 cents to $172.27. Worldwide sales of Caterpillar machines for the 3 months ending in November were up 26%. Biggest push coming from sales in Latin America and Asia. Shares of CAT rose more than 3.5% to 148.57, making it the top performing Dow stock today. And Honeywell forecasts higher profit next year and says that a tax bill could lead it to invest more cash in this country, and that could include acquisitions. The industrial company says new products will help drive its growth. Shares of Honeywell up $2 to $155.80.
Eli Lilly is lifting its earning and revenue forecast for the next year. The company said that outlook is due in part to strong demand for its recently launched diabetes drug and its psoriasis drug. Lilly is also optimistic about its experimental rheumatoid arthritis drug. Shares of Eli Lilly rose $1.18 to $87.89. Delta is set to place a huge order with Airbus. According to reports, the airline could place orders for 100 jetliners. That deal would be a blow to Airbus rival Boeing. Shares of Delta rose slightly to 53.63. Boeing shares blew off that report, however. That Dow component rose to 291.84. Well, the holiday shopping season is not shaping up to be a very good one for Pier 1. The furniture and decorations retailer said sales softened at the start of December after a relatively strong Black Friday. The company is using promotions to get shoppers back in the stores and says it's revising its guidance to reflect the current environment. Shares of Pier 1 were very volatile today. They dropped sharply in initial extended hours trading, but the small cap stock finished the regular session up 6%, about to $5.84.
It looks like T-Mobile plans to launch a pay TV service. T-Mobile is acquiring Layer 3 TV, a company that integrates TV, streaming, and social networking and uses your internet connection to deliver TV channels. Though no specifics were announced, shares of T-Mobile rose on the news. The yet-to-be-announced service will compete against traditional providers, which fell in trading today. And Comcast, one of those providers, is the parent company of CNBC, which produces this program.
Meantime, AT&T has started testing high-speed internet delivered over power lines. The second largest U.S. wireless carrier said the trial marks its latest push to offer faster broadband service. The testing is taking place in rural Georgia, but the company said it could eventually be deployed in cities and suburbs.
And a deal between Disney and 21st Century Fox could be announced as soon as tomorrow. According to CNBC, the acquisition of some of Fox's assets will be valued at about $60 billion. Disney became the sole suitor after Comcast dropped out of the bidding earlier this week. An announcement tomorrow on the management of the new company is not expected. And coming up, retail battleground. Did Target hit the bullseye when it comes to speedy delivery?
Here's a look at what to watch tomorrow. The FCC is scheduled to vote on changing the rules that govern the internet. As we reported, Disney is widely expected to announce its purchase of certain Fox assets. It's also one of the busiest package delivery days for FedEx, and that's what to watch for on Thursday.
And the Labor Department is giving the public more time to comment on its proposed tipping rule. Under the proposal, restaurants could require waiters and bartenders to split their tips with coworkers, even with managers. The move would reverse a rule enacted during the Obama administration, which declared tips the property of the workers who collected them. The rule could impact thousands, if not millions, of employees and billions of dollars in tips.
A major American mall owner is being acquired by a European shopping center company. Westfield is selling its 35 malls to a French company for nearly $16 billion. Included in the deal is the mall at the World Trade Center. One analyst said this deal could trigger others in the sector as developers look to consolidate and better compete in a changing retail industry.
Amazon will expand its same-day delivery and one-day shipping to thousands more cities across the country. The services will now be available in about 8,000 municipalities, up from 5,000. The move could give Amazon an advantage over other online retailers as last-minute shoppers look to get their packages delivered before Christmas.
But it's not just Amazon that's focusing on faster delivery. Target today said it's buying online delivery company Shipt, a move that will enable customers to have groceries brought to their door soon after they place their order. And that helped lift shares of Target, and it ramped up the competition of speedy deliveries. Courtney Reagan has more.
As Amazon delivery gets faster, traditional store-based retailers have to up their delivery game. Today, Target joins a growing list of retailers offering same-day delivery options for time-pressed shoppers. But there are key differences between Amazon and the rest of retail when it comes to how it works. Amazon ships from its network of heavily automated distribution centers and uses more traditional couriers for delivery, like UPS and the Postal Service. For store-based retailers, the best way to deliver to shoppers same day is to fulfill the order from a local store. But that introduces some problems. First, retailers need inventory systems tracking what's available minute to minute on store shelves, so shoppers aren't disappointed if someone else buys it in the store before it's packed up for delivery. Plus, same-day delivery is expensive.
Every time that you touch an individual item and move an individual item, you are adding cost into the overall supply chain of that item.
Retailers are increasingly partnering with startup logistics companies to make that last leg of the delivery, or the last mile, less expensive and faster. Still, retailers aren't able to offer same-day delivery completely for free. Target will now be using Shipt personal shoppers who also deliver consumers' orders for same-day delivery. But you have to pay $99 per year Shipt membership for the unlimited service. Best Buy uses startups Deliv and GeoDis to deliver same-day orders in 40 U.S. markets for $5.99. Macy's also uses Deliv for its same-day delivery in 33 markets, charging $8 for those that meet free shipping thresholds. Otherwise, it's $18.95. Amazon's same-day or 2-hour Prime Now delivery isn't free either. It's only available with a $99 a year Prime membership. But Amazon does offer offer other services with that membership too, like streaming video and music.
Amazon's done a good job of kind of masking it and making it feel like it's not a cost, whereas it's a visible cost with the other retailers.
Walmart doesn't currently offer same-day delivery, but like other store-based retailers, does offer same-day store pickup. Target's deal to buy shipped outright does take the same-day delivery wars a step further, but with an estimated 40 cents of every dollar spent online going through Amazon, it's going to take a lot more than buying a delivery startup to catch up. For Nightly Business Report, I'm Courtney Reagan.
And we end tonight with a tribute to one of the fathers of American business journalism. Marshall Loeb died Saturday after a long fight with Parkinson's. He grew up not exactly poor, but far from rich on Chicago's West Side. Got a journalism degree at Missouri and went to work. He never really stopped. He was a writer and an editor, a columnist at Time. He went to a struggling Money magazine and made it a money machine. Then he did the same at Fortune, turning it into a business must-read. He interviewed presidents and CEOs, edited the Columbia Journalism Review, and popularized personal finance and business coverage on TV and radio. He twice won the most prestigious award in business journalism, the Gerald Loeb Award. Gerald Loeb was no relation. In 1982, he hired a green kid from Virginia to come write for him at Money. I owe my career to him. Loeb was 88.
And he was a very nice man.
Nice fellow.
That does it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Mathisen. Have a great evening. We'll see you tomorrow.